Hello everyone, this is Martin. This is the recap video, and I just want to go over the potential for what could have happened on the previous week for July the 11th to the 15th. And as a minimum, there were approximately 411 pips to be made. However, you could have also made as much as many as 566 pips, which is not bad at all. And again, remember, this is all based on the daily and H4 charts. Again, it's not for intraday, more in the longer time frames. When you get home after work, you would take a look at your charts, and sometimes the best time is not right away after 5 o'clock Eastern Standard Time here in the Toronto area, but wait a few hours later until after the Tokyo session opens up after 7 p.m. I personally enjoy looking at the end of the day trading around the 8:30 mark onwards Eastern Standard Time. So again, let's start with the Euro USD. Let's take a look. And in my last week's video update, I did mention take a recommendation sell below the 109.88, and let me just take a look. 109.88, which is way down here, and that never happened. So you can see this. This is the red line here shows you the close on the previous Friday. This is the Sunday, Monday, Tuesday, Wednesday, Thursday, Friday trade here. So price never went down much lower. So no real trade opportunities. Basically, we're only looking for trade opportunities to the downside since price here is below the 21 and price is below the 50. Okay, so last week there were no real trade opportunities, and even to the upside, I mean, there was not much space from here to the 200 and then from even here to the 21. So that's it for the for that pair. The British pound, the USD, that probably was could have been your biggest winner, and I did mention because of the huge downward price movement, get ready for counter trend to the upside. My bias last week after price had come down here, and I noticed that price was hanging around the support zone here. I personally was looking for a bounce off this area, the gray rectangle, and it actually came right here with this pin bar. Do you see the long wick or shadow below this upper bullish white body right there? That's a bullish pin bar, and if you would have gotten in right there on the next the open of this candle, that was good for 272 pips, the big winner of the week. If you would have held on to it, you would have made even a lot more. And depending on your trading style, let's take a look from here all the way to here, 369 pips. I mean, that's a pretty massive move in just 1, 2, 3 days. Great counter trend right there. But that's how you play. That's how you get in on a reversal. Again, looking for a pin bar right there. You see, there's the pin bar. Getting in at the open of the next candle right here. And if you would have even taken your profit at the end of the candle close on the next day, then you would have made, like I said, 272 pips. So this candle here was on the Tuesday. This candle here was the Sunday, Monday, and so Monday evening, coming home, taking a look, and placing a buy trade right there. That would have given you the pips. Okay, now we go to the Australian USD, and with this one, there was 40 pips to be made. Let's take a look. Um, the the previous Friday, right here, you can see that was a huge white bullish candle, and playing the breakout above the high of this candle, uh, you would have, even if you would have gotten in at the next day there, it would have been a little bit of a loss, 36 pips or so. But staying in, or just above the high there, would have given you at least 40 to 45 pips. Okay, and we're going to take a look also at the H4 chart. With this pair, I did say in last week's video that this pair was trending higher, so um, obviously getting in right away at the Sunday Monday would have given you a bit of a, like I said, it did pull back, but not a significant amount. And look what happened on the Tuesday's candle right there. So now I'm going to switch to the H4, and you can take a look here. This is what happened the previous week, like before this red line here broke out here. But this is what you do. You wait for price to go higher, wait for pullback, draw a trend line. Okay, let me just do that. Okay, there's the trend line. This candle, you can see that right here, breaks the trend line. This is the counter trend line. Where price is moving higher, higher, higher. You can see MACD histobars are getting bigger and rising above the zero level. Price is staying above the 21 moving average. And you can see the moving averages are all in the correct order. Here's the 200 with the red dashed line, the 100. Here's the 50. 21, here's the 8. So basically all the moving averages are in the correct order, indicating that we do have a well-defined trend. Prices come back down to this support area, bounces right off the support, the gray rectangle, and support is also substantiated by the stronger by the strong 21 EMA as well. So you can see after this getting in right there, the open of the next candle, that was good for 76 pips, a lot more. But anyways, whether you would have gotten in on the daily candle or on the H4 candle, or even if you're, trading intraday. Let me just go down for a second. Here's the 1 hour. Okay, there you can see that. I've switched this to the 1 hour chart again. If you're looking intraday, this would have happened here at the open of the next day. You see price came back down, bounced up. All the moving averages are in the correct order. I mean, this is about as perfect as you can get. When I talk about moving averages in the correct order, we want the 8 to be above the 21, 21 to be above the 50, of course the 50 above the 100, 100 above the 200. All four moving averages are not only in the correct order, but there's space, well-defined space between each moving average, and they're all angling higher. I mean, it's about as good as perfect as you can get for an uptrend continuation. Price came back down, bounces up with this candle right here, getting in right there. You would have been in profit immediately, even on an intraday level for those people who are intraday trading. Okay, next one we get to the New Zealand USD. Let's go to the 1 hour. And I did say price was at resistance. Okay, so that was the very first thing I said. So caution, price is at resistance. And I said uh, you possibly can take a breakout trade above the 73.30. Price never closed above the 73.30 mark. Okay, in fact, it was rejected off the support area. So no real trade opportunity there. However, the bounce off the resistance, there was an opportunity uh, after this bar right here. See, this bar right here, it's a bearish bar, and quite often you can always get in right away. And your stop loss would be fairly small and tight, just above the high of this candle. Okay, so your stop loss would have only been, let's say, about 50 pips. Smaller lot size would have gotten you in, and you would have made this movement right here with this large bearish candle, and staying in the trade you would have even made more. However, conservative traders might have waited for this candle to close. This candle closed below the 8, and then the next area of movement is from here to the 21, and also the trend line. So you would have made some small pips based on that kind of strategy. That was good for about 33 pips, but holding on to the trade would have been good for 90 in total. Okay, so again, take a look at the opportunities there. The H4 chart, you can see certainly you could have gotten in just below the 50 here. Okay, and so that's that. Now we get to the US CAD. And I said wait for a pullback and buying evidence. Now the thing is, with the US CAD, the pullback price went up here, pull back, but there's no real buying evidence until the Friday's candle close. Okay, so you see, this is the first candle that does give you buying evidence. It does close above the 50. However, this happened on a Friday, which means you have to wait to the next day for if you want to consider a buy trade the next day, being after the weekend on the Sunday Monday open, which is what I talked about already in the brand new video, the video opportunities for the week of July the 18th to the 22nd. Okay, so there's your opportunity right there if you want to consider that. But basically, no other trade opportunities, even to the downside. I mean, prices, all the moving averages are kind of jumbled up together. So there were no other opportunities there. And I also said I could possibly wait for a breakout above the 131.20, and candle did not close above 131.20. So again, no trade opportunity. Okay, now we get to the U.S. Swiss franc, and I did say basically with this one, my suggestion was to look for a breakout above the 99.20. 99 99.20 is way up here. So obviously I was playing it safe. Price did not even come close to that. So no trade opportunities. Price has now come back down, and it looks like price may come back down further. So again, all the moving averages are all tied in together. You can see here's the 200. They're all jumbled together. So just stay away from this one for now. And there was no opportunities. And finally, we got to the U.S. Japanese, and I said, possibly take a sell trade below the 0.9980. And let's go to the daily chart, because I said price was trending lower. However, price never really did go below the 99.80, which is 99. Yeah, it's right about there. You see, so price never did close below there, so no opportunity for sell trade. In fact, this was possibly great for a counter trend trade, and always take advantage of that when price is reversing and possibly giving you a counter trend evidence. You can see that clearly with this huge white bullish engulfing candle, completely engulfs the previous candle on the previous Friday close with the red line I've shown here. So this moved above the 8. However, I still probably would not have gotten in right there, just because the open space from here to the 21 was fairly close. Uh, However, I would have possibly placed a pending buy stop order just above the 21, right about there, and that would have been good for about 66 pips. Okay, so the other idea is taking a look at the H4 chart again. Excuse me. Here's the H4. Now, this is when you see price like this going sideways. Here's a sideways consolidation, slowly moving up and gaining speed, gaining momentum. The shift in the histobars from below the zero level to above the zero level right here. This is called a momentum trade, which is what I also talked about in my first course. So the trade opportunity really was right uh, you could have gone in right here at the open of the next candle, even though the 100 was just above it. Okay, here's the 100, but getting in right there would have given you at least 62 pips. Pretty darn good. The open space was wide enough for a good trade opportunity. However, also take a look to your immediate left. You see that right here where my mouse pointer is right there. I'm going to draw in a rectangle. Okay, a little. There we go. Okay, so you see here, once price breaks here, the next open space from here is this resistance area. Resistance is indicated from the previous swing high to the immediate left here. You can see that. And once price breaks this area, you're good to go. And this would have given you at least 158 pips. 160 pips. So really good opportunities. Two opportunities on the H4 chart. If you're looking at that, again, that it can be considered end of day trading since you're going to look at your charts every 4 hours and determine whether you have a trade opportunity. So here's the candle that broke above the 50 with a huge momentum. You can see histo bars right here getting really close to zero or at zero and then getting in right there or just waiting for price to close or open take a breakout trade above the previous swing high here. So two really good opportunities there. Again, intraday, if you're intraday trading, let me just go back in time. Okay. Oh, let me just take a look here. Where are we? Here is the H4, and then we've got to go to the, there we go. There's the line. Okay, so you can see Um, this is the close of the previous Friday here. Really, prices are just not going anywhere. They just up, down, up, down, up, down. Just really going sideways. And all of a sudden, we have a huge shift in momentum right here. And on the hourly chart, what you want to do is here's the opportunity because then you're looking for open space. You see right here? Take a look below your chart. Okay, let me just. There you go. Take a look. You see the histobars from below zero? Transgressing to above the zero level. Okay, that's what I'm talking about. Now the histobars are getting higher. Huge momentum shift right here, getting in right there, and the open space to at least at 200 is intraday 67 pips. Expecting price to stall around the 200. It did sort of the next candle, and then right away, boom, bingo bango, all the way up. Okay, on the intraday if you're available. So for at least like, oh, in this case, intraday 291 pips. So this could have been a big major winner for you as well. So this is just a bit of a tip for the intraday traders if you have time during the daytime. And Although this happened, I have to admit, this happened early in the morning hours because that's intraday. That still, you know what, that wouldn't have worked there. I'll tell you why. 5, 6, 7, 8, 9, 10, 11, 12, 12 o'clock. Okay, 12 midnight, 1 o'clock. This is the 1 o'clock candle right there. So if you're up at that time, you would have seen that. Most likely not. So you switch to the H4. For the end of day traders, you certainly this one right here. So this, well, again, same thing, right? Um, this happened at 5. Yeah, so again, this sort of happened in the early hours in the morning, and that's like I said, the best trading really does happen at the London session, and that's where you get these huge moves. But again, there is for the end of day, pure end of day on a daily chart, you certainly would have seen this candle, you would have seen that candle. So, anyways, hopefully all of this information helps you guys. If you need any more help, feel free to give me a shout. Email me and I'll help you as much as I can. Take care, everyone. And this was good for, like I said, at least 411 pips based on the daily H4 charts and mostly the daily charts. Okay, so there's still opportunity for those people who are still trading end of day. They just don't have any time to sit on the computer except in the evenings after they come home from work. And but that's good. I mean, there's still opportunities. You just have to stay patient. Okay. So take care, everyone. Talk to you again soon. Bye for now.